Hey everyone, today is Thursday morning, Jan the 25th, about 10 minutes of 8 Pacific time. And I want to quickly go over a trade that I have going on, one trade I have going on this morning. So, the basic setup of this trade, all right, so I currently have a butterfly down here in the, by the way, this is a 0 DTE, 0 days to expiration in the SPUs, SPX. Underlying is currently at 48.90, and we've been in this area for, and by this area, let me show you, for the last few days, or let's just say this week. These are 1 minute candles of the SPUs, and just a few minutes ago, we were near the highs around the 49 even handle. Anyway, when we were up here, I thought the market might take a little poke to the downside. So I decided to do something simple. And what I did was I bought a put spread, 75.70. So I bought the 75 and sold the 70. I believe I did that around for 60, 70 cents. Let me double check. And here we go. So what I'm hovering over with the mouse is the price that I paid. So it was a 60-cent debit, and I'll go over to the right, and we'll see that I bought the 75 put and sold the 70. And again, this is 0 DTE. So I paid 60 cents for it, and this was a simple trade. And what I wanted to do was a couple of things, possibly. Now, if the market moved down quickly, obviously I'm looking for a bit of a down move here. If the market moved down quickly, I could have tried to box this off. And since I paid 60 cents for it, if I would have paid 440 or less for to buy the 70-75 call spread, then that basically makes the trade zero loss minus commissions. But I'm not looking to put on a position so that I can scratch or take a small loss unless I decide that I'm going to take a loss on the trade. But anyway, one way I could have gotten out of this trade was to try to box it off. And let's say that I would have done this. So again, I'm buying the 70 call and selling the 75 call. If I paid $3.80 for it, current price, then I would basically have locked in a $60 profit. And that works because if you can see, notice this is a box trade. This has to go out at $5. $3.80 plus the 60 cents I paid here is $4.40. So when the box goes out at $5, I make a $60 profit because I paid $4.40 for it. But so I was pricing that out, and that was a possibility. Another possibility was going over to the put side and buying a 48.60, selling the 65. So I could have turned this into a condor, and depending upon the price that I might have bought it for, yeah, that's a possibility. The market started to go down a bit, which was what I was looking for, and I ended up selling a put spread to turn this into a butterfly. So I sold the 70 and I bought the 65, and I did that. The credit I received was greater than what it cost me to buy the 75.70 put spread. So I did that for, notice that if I would have received the current prices, which is roughly 80 cents, then if I sell a put spread, this particular one at 80, and I bought this other one to butterfly it off at 60, then I have the butterfly on for a small credit. But what I did here was, let's see, I ended up selling it for $90. So what does that leave me with? That leaves me with this butterfly. I get a spin on the roulette wheel, so to speak, slotting it here, pinning it at 48.70. and I was able to do this for a credit, which I don't mind. Obviously, I'm not going to, obviously, the worst case scenario here is I'm not going to make a ton on this, but I do have, let me show you the view here. I do have a profit locked in of 30 bucks. Why is this not right? Let's see. Oh, I gotcha. All right, so I have to close that out. And let me go back. What I have at the current moment, so I bought one spread at 60 and I sold the other one at 75. I'm sorry, 90. So I paid 60, sold 90. That leaves me with wherever the market goes, except for the pin price in the pin area, I'm going to make $30. So that's locked in. So I have this butterfly on for a $30 credit. Obviously, if I get extremely lucky on the spin of the roulette wheel, if it pins at 70, then I make max value, but I am definitely not banking on that. However, towards the end of the day, and that means expiration, so out here, that's 1 p.m. If prices start to move into this area, then I will probably not look to pin it unless it just happens to sit here. But as it's moving into this tent, as time is expiring, my profit window will move up because the 70 strike options will start to deteriorate very, very quickly. So I might be able to get out of this trade for a, I don't know, $150, $100, $200 winner, $300 winner. I don't know. It really depends. But that is predicated upon price moving into this profit tent area. If prices stay up here or they go down a lot more, go up a lot more, then I end up with 30 bucks. But the point is that I was lucky on the first leg entry and timing the second leg entry so that I was able to put this on for a $30 credit, and I get the ensuing spin of the roulette wheel. I'm not expecting it to pin because nobody's that lucky, especially me. However, as I mentioned, I can go from a $30 profit to a bit more should price cooperate and end up around this area. Let's call it 75, 65 near the end of the day. So this could get interesting in the last 45 minutes, half hour of today's trade. Okay, I hope that was helpful and interesting. If you think this might help a friend of yours, feel free to send him the link and have him check out the video. Talk to you guys next time.